Hello everyone and welcome back to another installment from our webinar series, Straight from the Horse's Mouth. Declarations, disclosures and climate reporting can be tricky to understand. Abbreviations fly around: GRI, IR, TCFD, ISSB, XRB. And which of these frameworks should you use? We're fortunate to have experts from the New Zealand External Reporting Board, XRB, join our webinar series to help explain Aotearoa New Zealand's forthcoming climate standards. Here's a sneak preview.
Why are you reporting? What are your key drivers? Is it because it's mandatory, or do you want to do it voluntarily?
But for those of you who are here, because you must report according to legislation, those are climate reporting entities in New Zealand. They're called climate reporting entities in the legislation. And for them, XRB standards are mandatory to disclose against. You see quite a bit of cherry picking about which bits of the TCFD people want to report against. They kind of tend to do the easier stuff rather than the more difficult stuff. And what we hear really, really clearly from both entities and primary users is that they want consistency. The wider point, I think, that is still important is that when investors are making decisions, they want to see a more fulsome picture about how the entity is creating value and how the entity perceives, the value that it is creating. So we really hope that the XRB standards will enable that.
It was great to see some of the poll results within this webinar, and it was awesome to see the interactivity from the audience. Amelia, Judy and Barbara provided their insights on how the forthcoming climate standards could apply to the audience's own business practices. But ultimately, it was great to get an understanding of what to expect with these new standards. With that, let's get started.
A very warm welcome back to our webinar series, Straight from the Horse's Mouth, Insights from Experts in 30 Minutes. My name's Barbara. I'm your host for today. I am CEO of thinkstep-anz, and today we are joined by Amelia and Judy from the New Zealand External Reporting Board, and they will explain what New Zealand's new climate reporting framework and required disclosures will look like. So this is really not just only about New Zealand, but also quite relevant for Australia, because quite a few businesses here are either a subsidiary of an Australian one or the other way around. So there is a lot of interconnection. So it's quite relevant to also Australian businesses. Understanding climate reporting with the XRB. We also quite like to get to know our audience a bit. So why are you reporting? What are your key drivers? Is it because it's mandatory, or do you want to do it voluntarily? Most here really want to do voluntary reporting, and that is really encouraging to see. My guess is you see the business value in reporting. We do have a number of reasons, mandatory versus voluntary, and a number of different types of regulations and frameworks. We've got the Zero Carbon Act, the Emission Trading Scheme, and then what is making our TCFD disclosures mandatory for a group of businesses as of next year. And then for the voluntary reporting, you do it because you want to follow the Science Based Target Initiative, you're a member of the Climate Leaders Coalition, writing a sustainability report. So all those sort of are different frameworks that you would also follow, which goes to the next question. Who are you doing the reporting for? Who's your key audience? So we'll go to the next poll. What are your specific drivers for your reporting? It's just good business practice, and customers are asking for it. And requirements really are a little bit less of a driver, and that is really interesting. So thank you for sharing that with us. It just tells us a little bit on who is out there. When we ask the question, who's the audience, we always look at who are the internal audiences, your staff, your directors, but also people who have generally just started, or maybe people who will start and you want to attract to your company. And then your external audiences who are not just your customers, but also the local communities, your NGOs, Indigenous communities. So quite a range of stakeholders. And now bringing me to my last question, what is it that you actually need? Where do you need help and where do you need support? So I'll run the last poll. Is it data? Is it the emission factors? Is it clarity on standards? That jumped out quite a bit. And you just don't know where to start. Clarity on standards. I guess it's a good thing you've dialed in for today's webinar, because it is what we're going to talk about a fair bit. So most people really need clarity on the standards. Some need emission factors. Some are just starting out. And in terms of guidance, I'll just point you briefly to the Ministry for the Environment. Here in New Zealand, they've put out some really good guidance documents on how to get started. So I'd encourage you to go out to this, and we might put the link out as well for people to find. And in terms of emission factors, I can only say it's coming soon. Judy just asked when, and I say soon. I was promised by my colleague by the end of the week. And what we have is our spend-based emission factors. And the reason it takes them a little longer is we've split them out into scope 1, scope 2, and scope 3, but also into direct and indirect. And the reason is that Greenhouse Gas Protocol talks about scope 1, 2, and 3, and the ISO standards talk about direct and indirect. And they're slightly different groupings. So we do want to accommodate both options, and that's why it's taking a little longer. So much for me, and now it's my pleasure to hand over to Judy and Amelia, who will talk us through the climate reporting with the XRB.
Brilliant. Thank you, Barbara. It's great to be here. Judy's just having a bit of IT problems, having to restart her computer in the background. So I will, she'll be here in case we need to answer any tricky questions later. But thank you very much for having us. And I am going to be focusing on the 5 key questions that we had in the ad for this webinar. So, firstly, how do the TCFD, ISSB, XRB frameworks interact? It was really interesting to see that poll result wanting clarity on standards, and I definitely agree there is a lot going on. So I'll run through each of these and hopefully a coherent picture will emerge at the end. So the ISSB is a merger of a number of international standard setting bodies, including the Sustainability Accounting Standards Board, or SASB, the International Integrated Reporting Council, and the Carbon Disclosure Standards Board. The ISSB has been formed under the auspices of the IFRS Foundation, which is that logo you see on screen, and that's the parent organisation for the International Accounting Standards Board. So they're very focused on investors and what the investors' needs are. So the ISSB has produced 2 exposure drafts. Firstly, a general sustainability disclosures, and they received about 700 submissions on that exposure draft, and then a climate-related disclosure standard, and they received about 600 submissions on that. So they, at the ISSB, they have many people feverishly examining the submissions, and they are, as far as I understand, still aiming to issue those standards by the end of the year. And here at the XRB, we are keeping a very close eye on what they are doing. Now, the ISSB climate standard, which intends to operate as this global baseline for disclosures, and to a lesser extent, the sustainability standard, their sustainability standard, have been modelled on the TCFD disclosures. Now, I'm going to assume you're all aware of what the TCFD is, so I won't go into why that was formed, but in about 2015, designed to provide better information to the markets about climate, especially climate-related risks and opportunities. So those 11 TCFD recommendations under strategy, governance, risk management, and metrics and targets, and a substantial amount of additional guidance that the TCFD produced, they really were the gold standard for climate-related financial disclosures. Now, however, given the establishment of the ISSB, in my personal opinion, I think that the TCFD's importance is likely to wane over time. Now, here at the XRB, we also use that TCFD as our primary source material, but we also were informed by the work of the ISSB. But for those of you who are here, because you must report according to legislation, those are climate reporting entities in New Zealand. They're called climate reporting entities in the legislation. And for them, XRB standards are mandatory to disclose against. So the standards are secondary legislation, and there are clear penalties in the primary legislation for entities failing to comply in terms of failing to report. So if you are a climate reporting entity, it is definitely the XRB standards that you should be focusing on the most. So where does that leave the ISSB and the TCFD? New Zealand, as of yet, has made no formal decisions about endorsing or adopting ISSB standards, but we are watching their efforts closely, and we absolutely support the work that they're doing. We intend to issue some form of comparison or reconciliation document next year, which compares the XRB's climate standards to the ISSB climate standard, so that any entity that wishes to understand what more or less they would need to do if they wanted to also state compliance with the ISSB standard, that would be very clear for them. For the TCFD, I would say that the guidance is still highly relevant, and we have drawn on it heavily for the XRB draft staff guidance that's going to support this regime, and I'll talk about that in a bit more detail later. And for those who want to get into the nitty-gritty now, we have also issued 2 comparison documents which compare one of our draft standards and the TCFD and the ISSB exposure draft. So hopefully that explains, how those 3 things work together. And I will talk a bit more about the voluntary reporters. So really interested to hear more about them or to see that you're on the call today.
Amelia, there is one question. Thank you so much for that overview. Really good to see how they all fit together. You made a brief comment that you think that the TCFD will wane over time. Why do you think that is? I
think it's because it's not a standard. It's not written like a standard. Mandatory standards or even an ISSB standard is written really differently to the TCFD recommendations and guidance. They are very precise. The idea is that there is a very, certain amount of things that you need to disclose against. If you are going to disclose against the TCFD, there are the 11 recommendations, but they're so broad and there's so much guidance. If you look at voluntary TCFD disclosures made by entities to date, they are so different because they interpret the TCFD differently or they pull different things in. And also, people have really tended, I think, you see quite a bit of cherry picking about which bits of the TCFD people want to report against. They kind of tend to do the easier stuff rather than the more difficult stuff. And what we hear really, really clearly from both entities and primary users is that they want consistency. They want to be able to have real clarity about what the entities are doing, what they're disclosing. And I think that the standard approach, which is, at a domestic level, XRB, international level, ISSB, I think that will offer it more. But as I said, TCFD guidance is still exceptional. There's so much useful stuff in there. But I just think over time that move to more formal standard process will be what people are looking for. How do we read the XRB framework? So a very quick recap about why we consider these disclosures are important. So yes, there is a legislative requirement, but especially for the voluntary reporters in the audience, we think they really enable 2 other key outcomes. And firstly, it's that better decision making by investors so that they can make more informed decisions about the climate related risks and opportunities facing the entities and the sectors into which they invest. But also really importantly to back up, that is also the better strategy by the entities themselves, because the disclosures encourage entities to think about their strategic choices in light of the risks and opportunities of climate change. We have really heavily focused on that TCFD intent, which is about strategy. And I will emphasize before I get going that these are still exposure drafts at the moment. They're out for consultation. We're really keen to for feedback before they are issued in their final form in December. So how to read the framework. The climate-related disclosure framework we are proposing is going to be made up of 3 climate standards, and those are collectively referred to as Aotearoa New Zealand climate standards. And as I said before, each standard is a piece of secondary legislation. So we've got draft NZCS1 at the top, which is climate-related disclosures, and that's where you've got those main 4 disclosure areas, which is governance, strategy, risk management, metrics, and targets. NZCS1 also identifies the scope of the mandatory assurance that is required by primary legislation over the greenhouse gas emissions disclosures. Then, based on feedback received over our last 2 consultation rounds, we heard that the standards, the package of standards, needed to acknowledge that there was a really wide variety of capability within climate reporting entities. So as a result, we're proposing a first-time adoption standard, which is draft NZCS 2, and that provides a limited number of first-time adoption provisions. Basically exemptions for a year or 2 for certain of the areas which are either trickier to report against, like Scope 3 greenhouse gas emissions, or it just makes sense. Trend analysis, you can't really provide a trend analysis when you haven't been reporting. And an entity can choose to use first-time adoption provisions. They don't have to. And then we have draft NZCS 3, the general requirement standard, and that's really important because it houses both the principles for disclosure and the general requirements. So we're really encouraging that diagram on the left is supposed to show that they're a package. Please read them together as a package. And yeah, as I said, they're out for consultation. So we're keen for feedback on whether they're working for people or not.
Do you have a question regarding the XRB framework and does it align with the EU Taxonomy?
Oh, great question. So we are paying really close attention to all the work that's been going on in terms of taxonomies. Taxonomies are really useful because, they help to avoid greenwashing. If someone says, then this is a green investment, this is how it works. At the moment, we are not aligning the standards with a taxonomy. We're really keen that there is work done on taxonomies. Our view at the XRB is that it makes no sense really to have domestic specific taxonomies because it's really confusing. If every country did that, there'd be a really challenging translation piece. So we're paying a close attention to what's happening in the taxonomy space. But at the moment, the standards are written in a really principles-based, ambitious and highly flexible manner. So we've done that purposefully so that entities can start disclosing. If they haven't disclosed before, it should kind of really be able to meet entities where they're at, but also will enable entities to bring in other things like taxonomies, etc., if they want to, also talk about the fact that they're using those. We have committed to doing a quite early post-implementation review of the standards. So that's going to begin no later than December 2025. And by that point, things are moving so fast in this area. We really think we should be able to understand more about what potential integration with taxonomies might be needed then. So how is the XRB framework relevant for voluntary reporters? And yeah, as I said, great to see so many voluntary reporters here and the reasons why you're reporting. So XRB standards apply to those entities which are required under the Financial Market Conduct Act 2013 to prepare climate statements. If you are not sure, if you are a climate reporting entity, we really encourage you to get independent legal advice. And if there's still some uncertainty at that point, to then speak with the FMA. However, any entity may choose to apply the standards voluntarily. And we have a bit in NZCS 3 where we say that if any entity does elect to voluntarily disclose against the standards, you are encouraged to apply all the requirements of Aotearoa New Zealand climate standards. And this is to avoid that cherry picking of only some of the disclosures, and also to avoid the situation where essentially it's confusing for people out there in the market that may not understand why some entities are disclosing fully and others are not. So if you are interested in voluntarily reporting against the standards, but you're not ready to disclose fully, I'd encourage you to look at the requirements and do an internal readiness assessment and maybe report internally for a year or so until you may be ready to publish a voluntary report. Importantly, also, there are no mandatory requirements in the XRB standards that compel the disclosure of information, such as greenhouse gas emissions data, to a climate reporting entity. But you might be requested by your bank or your insurer or customers to supply this type of information for their reporting purposes. For example, that could be a condition of capital from a bank or a condition of doing business from an upstream or supplier. So important message we're trying to get across is that greenhouse gas emissions information, especially, and other climate-related disclosure information over time, is becoming a really important and fundamental piece of organisational information. And so if you're not measuring your emissions, we really encourage you to get started because it is likely to be asked of you at some point.
And we did see that in the poll just before, a lot of people are reporting because of customers asking them. And that what we find a lot is, we're being asked for this, but we're not started yet. And then that's okay, because you can also report you have a plan.
Exactly.
You're going to follow these standards, and that is how you're going to start, and that is your roadmap to get there. So I don't think there is any reason to panic if a client is asking, because a lot of our clients also start implementing those responsible procurement frameworks where they're starting to ask those questions. And what they always hear is, we're not going to change suppliers, but we want to bring our suppliers on board.
Yeah, I would absolutely agree with that. I'd also say, you really want to make sure that if you're saying that you've got a plan and you're saying you've got a target, that you are actually doing something, to meet that target. You're not, putting greenwashing information out there in the market. There's going to be a lot of attention on those types of claims.
I've got a couple of questions here. One is, under the XRB framework, are you obligated to report just annually or for each quarterly earnings call or more regularly?
Great question. So we're very clear in the disclosure framework that you report annually. So it does not apply to interim periods. It only applies to your annual reporting.
One other question is there any specific difference or comparison between TCFD and the XRB climate-related disclosures? And can organizations refer to anything to understand the exact difference? So is there like a comparison document?
Absolutely. We have a comparison table on our website, which disclosure by disclosure goes through, compares draft NZCS1 with the TCFD recommendations and guidance. It's very detailed, and the team spent a lot of time working on it. So if you're keen to get into that nitty gritty, it is there. And so, as I said, we will be preparing a comparison document with the ISSB next year, and we'll probably do the same with the TCFD so that people can really understand what the differences might be.
And Jen wants to know, is there any consideration being given to the TNFD? It's a nature-related disclosure.
Yeah, so that's the things like the TNFD would be part of the ISSB's general sustainability disclosures. Here at the XRB, we do not have the ability to issue mandatory disclosure standards on anything apart from climate. We do have the ability to issue non-mandatory guidance. So we're looking into things like TNFD. We've got a whole lot of ideas and projects up our sleeve. So we're very keen to understand more about what's going on in that space, but no mandatory standards from a New Zealand legislative perspective at this stage.
I think we might move on to the next one, and then we'll collect more questions for the end.
Sure. Okay, so a question on what do the XRB standards mean for integrated reporting? So I'd like to cover two things in answer to this question. Firstly, the practical bits about the location of disclosures, and then secondly, conceptually more about the wider integrated reporting picture. So first up, those practicalities. So the Financial Market Conduct Act requires climate reporting entities that are required to produce an annual report to include a statement that the entity is a climate reporting entity and a copy of the climate statements prepared by the entity, or the address or a link to the internet site where a copy of those statements can be accessed. So in bit of a mouthful, but basically you need to have some form of integration. When a reader reads your annual report, they either need to see those disclosures in there or they need to have a link to where they can find them. Now, however, the Act does not specify the format of the climate statements or group climate statements. So we have designed some location of disclosure requirements, and those are housed in draft NZCS 3, and they're designed to provide flexibility to entities to present their climate-related disclosures in a way that is most meaningful for their primary users and to allow evolution over time. We heard really strongly that, some people really wanted to have standalone reports, some people wanted to integrate their disclosures. So what we do is we're proposing that you can permit your climate-related disclosures to be disclosed in a standalone document or within another document. And that could be a sustainability report, it can be annual report, etc. But importantly, if your climate-related disclosures are provided within another document, that other document must include a table that clearly identifies the location of the disclosures required by the standard. So basically an index where someone can go and say, I want to know what you've disclosed against paragraph XYZ, and they can go read that. We also are proposing cross-referencing to other locations such as websites, but there are some really important principles around fair presentation. So that's things like, it must be understandable, complete, coherent, etc. So if you're interested in integrating your disclosures in different places, please go read NZCS 3 really, really carefully. And then also wider integrated reporting as a concept. I think, with the establishment of the ISSB, there's a really significant move towards the consolidation of those frameworks. And there is clearly a lot of negotiation and manoeuvring about which parts of which frameworks are kept or amended or discarded as part of that consolidation process. But the wider point, I think, that is still important is that when investors are making decisions, they want to see a more fulsome picture about how the entity is creating value and how the entity perceives, the value that it is creating. So we really hope that the XRB standards will enable that. And just on the financial point, we often get asked a question about financial impacts. There's a lot of work and discussion behind the scenes here in New Zealand and internationally about producing guidance that provides useful direction to entities about how to make sure financial and non-financial disclosures work well together to provide that picture. So keep an eye out on that space for more in due course.
I think that point about the value in the integrated report is really important. We just, as I say, we have ours coming out tomorrow and Thursday. And even for us, a small business doing it purely voluntarily, going through that process was a real eye-opener on where do we add value to our business and where do we add value to our clients' businesses. So it's all about value on, for us, it's only 5 of the capitals because we don't do manufactured goods, but it's even just going through that process is really, really interesting and very eye-opening.
Very quickly on the last question, which I wanted to make sure we get to. So how to get started. So if you're a climate reporting entity, strongly encourage you to get started now. We've got lots of guidance on our website, which is, about scenario analysis or, preparation for directors, etc. We've prepared some guidance for all sectors, specifically also for fund managers. We've got lots of other guidance in development that we're hoping to put out this year, next year, TBC, depending on how much feedback we get on the exposure draft. So we're really, really happy to receive feedback on whether you think that the guidance that we're preparing is helpful, it's the right level of detail or not. And that's the staff guidance to support the standards. So yeah, really, really keen to help you get started. And I would second Barbara's comment about the MFE, getting started on measuring your emissions. Really practical, lots of really useful workbooks, really helps work through that process.
Thank you. We have a couple more questions. And one is, how does the XRB compare with the Global Reporting Initiative? You just talked about the Integrated Report Framework, but how does it relate to GRI?
Oh, great question. I'm going to hand that one over to Judy to answer. Thanks, Judy.
Thanks, Amelia. So the GRI is looking at impacts on the organisation as well as impact outwards, and so there is a potential that they cover a wider range of impact than would be covered by this particular climate related disclosure. However, we have tried to put our outward thinking lens on to see if it would change anything that you would say, and we don't believe there's much difference. In this case, theoretically, they are using the double materiality. But impacts on the people around you, we're pretty firmly of the opinion, I guess, that if you do enough impacts outwards, they will pretty quickly become impacts on your entity itself. Also, this standard is around impacts on the entity over the short, medium, and long term.
And the very last one that we will sneak in is, does the XRB framework take into consideration the UN SDGs in any way?
So we have definitely looked at the UN SDGs. Our main focus, however, was to base it on the TCFD. The point of these disclosures is to shift capital. It really is about making that money make a difference to climate change. So we're focused very, very closely on that. But no, we've got people in the team who are more expert on the SDGs, and I can see them behind Barbara. So yeah, we have looked at them, but we have stayed quite close to the legislative intent of these disclosures, which is about capital and climate.
Mm-hmm. Thank you so much. That was Amelia, Director of Sustainability Reporting at the XRB, and Judy, who's a specialist at XRB for metrics and target sections. Thank you so much for sharing your insights. That was really, really useful. I found it really interesting. What we will do is we will have a recording of the webinar available. And if you have further questions coming, please just send them through to us and we will get back to you. So if you have any other questions, just get them through to me or just to my email isn't even on here. Well, where you registered for the webinar, and we will get back to you and hope to see you very soon in the next ones. The next webinar we do have will be on integrated reporting on the 1st of September. We've only just locked that in, so we haven't quite got a slide for it, but next topic will be integrated reporting. So thanks again so much, Amelia and Judy.
Thank you.